to be looking at today is going to be asset correlation. All right, so we're going to look at it in this order. We're going to define it, we're going to explain it. And forgive me, you might be seeing one or two little mathematics, but it's a very, very basic form of mathematics that we're going to be doing here. All right, not advanced. As we go on, I don't know want to, but we'll be discussing some mathematical stuff, but not so much so deep into it. All right, just the foundation and then the very basics. So what we're going to be looking at now, let me just write it out: asset correlation. So get your notes ready, fam. We're about to start. So what is correlation? Let's start with what is correlation. We have two words now here together. We have asset correlation, we have assets, and then we have correlation. All right. And basically, you all know what an asset is, right? According to what we are discussing here now, which has to do with forex, you already know that we are talking about different pairs, the metals, gold, silver, all those things, right? Stocks, oil, indices, the major currencies, right? Cross pairs, DXY, features, each and every one of all those things, okay? All these are assets we look at, even the synthetic indices you trade also. All these things are different assets you look at in the forex market, okay? So there are different assets you look at in the forex market. Nevertheless, we're going to just now, you want to write this down. What is correlation? All right, so this is where our writing begins from, fam. So what is correlation? As easy as it is, because as once we can understand all these little terms here and there, then we'll not have much issues in terms of understanding the big picture at large. All right. So what is correlation? I love the definition that correlation simply means a mutual relationship or connection between two or more things. All right. So that's what correlation is. It's simply a mutual relationship or connection between two or more things. So when you're now talking about asset correlation, you now know that asset correlation, as we are dealing with, simply means a mutual relationship or connection between two or more assets. Okay, that's just what it is. A mutual relationship between two or more assets. All right, before we go further to discuss other things in asset correlation, I want to define some terms, right? Which are the three terms we're going to be considering seriously in this, which is asset correlation, then intermarket analysis. All right, so you can also write this intermarket analysis. So let's just define that. So intermarket analysis, what is it? All right, intermarket analysis. This is a branch of technical. The branch of technical analysis that examines the correlation between four major asset class, which includes the stocks, which also includes the bonds, which also includes commodities, and finally currencies. All right. So this is what it's intermarket analysis. All right. It's a branch of technical analysis that examines the correlation between four major asset class, which includes the stocks, the bonds, the commodities, and then the currencies. All right. I was going through an article some time ago, still on asset correlation, right? Intermarket analysis and all those things. And while I was going through that, they're now talking about even adding crypto now into this asset class. All right, where you now have intermarket analysis between the stocks market, the bonds market, the commodities market, and then the currency, and then finally the crypto market. Okay, So they are trying to add the crypto into all this. But probably before now, it's intermarket analysis is just the examination, it's a type of technical analysis that examines the correlation between these four major assets, all right, the stocks, the bonds, the commodities, and then the currencies. I'm going to leave it at this point, please. When we now begin to go further, all right, in the class, we're going to be looking at other things you look out for and how these four asset classes comes together to work in terms of intermarket analysis, all right? So we're just going to take it easy. I just wanted to define this, all right? Then what then is relative strength analysis? These are the three major terms we are trying to consider here, right? What then is relative strength analysis? Right. So what then is relative strength analysis? It is simply the it simply has to, oh, okay, so let's share transparency. Okay, it has to do with the it has to do with comparing the strengths has to do with comparing the strengths and weakness of two or different assets. All right. That is what it's all about. Okay, relative strength analysis has to do with comparing the strengths and weakness of two or more different assets. Okay, so this is what we are going to be working with: correlation, intermarket analysis, relative strength analysis. Once you can understand the concept of correlation, understand the concept of this is the order we're going to take it. All right, after correlation, the next thing we want to be looking at what's now looking at with the understanding of a good understanding of correlation. We can now begin to look at relative strength analysis. Then with a good understanding of relative strength analysis, we can now be looking at what intermarket analysis. All right, that is now where the main advanced work now comes to place. Okay. So having seen that now, looking at what we have at correlation. So we define correlation to simply mean a mutual relationship or connection between two or more things, in this case, two or more assets. All right. So this is where we're going to now progress from. So when you begin to talk of correlation, right, we also have, for example, now in the forex market, the reason why we are considering all about these things, just like in the forex market, one thing is sure is that no market stands on its own. Let me give an example, because the bigger picture of what we are trying to arrive at now is the market analysis. We're just taking the process there, right? So let me give an example now. You know, in the forex market, no market exists on its own. All markets are linked to some other market somewhere else. All right. No market stand on its own and it's just existing there. All right. Every single market you see in the forex industry are linked to some other markets. All right. Those markets can serve as leading indicators to what these other markets are going to do. For example, the DXY can serve as a leading indicator to maybe what E or G or something like that is going to do. So an understanding of all these things, what we want to do. For example, now let's take transportation and fuel now. We can see that fuel prices in Nigeria and transportation costs are two correlating assets. Okay. Whenever there is an increase in the price of fuel, what will happen to the cost of transportation? There will be an increase in the cost of transportation. If, for example, this week the cost of traveling from Lagos to Abuja, okay, it's let's say 5,000 naira, although not possible, but let's just say 5,000 naira, okay. If an announcement should be made that the cost of fuel is going to rise at so and so time, maybe immediately, instantly, the price of transportation might not increase, but subsequently, as then they begin to move on, what do you now see? The price of cost of transportation will now do what? Align with the price of what's fuel. So it's almost like an increase in the price of fuel will definitely lead to an increase in the price of what transportation, right? A decrease in the price of fuel will also lead to a decrease in the price of what cost for transportation. So which of them now is a leading indicator? You can see that the increase in the price of fuel is a leading indicator to an increase in the price of what transportation cost. So if these two things now, for example, were tradable assets, so you're trying to determine where to buy or sell in transportation cost can be determined by, maybe you can easily predict it by following what the fuel prices are doing. So once you see the fuel prices start dropping, what do you expect the cost of transportation cost to do? To drop also. Okay. Once you see the price of fuel start rising, what do you expect the transportation cost to do? All right. To also do what? To rise. So all these kind of things are factors that's how asset correlation and the forex market behaves. Okay. So that's what we're going to be considering. But before you talk about relative strength analysis, which I'm going to come to, right? Relative strength analysis compares, yes, the weakness and strength of two or more assets, but compulsorily, those assets must be highly correlating assets. That is, they must have a relationship. They must have a mutual relationship or connection between those two assets. You don't just wake up and bring out any assets from anywhere and then begin to draw your relative strength analysis. Okay? Say transportation need a drop or ask negotiants. I don't understand. That is it that the transportation costs? Okay, you don't use to drop, it's always increasing, but it's alright, man. So based on that, as I said, now relative strength analysis, for you to be able to know what the other price is going to do, all right, they have to be correlating assets. So you don't just bring assets that don't have a mutual relationship or a connection between those two assets and begin to select to look at relative strength analysis, or you begin to select to look at intermarket analysis. So part of the things we want to understand is this concept of correlation. How do we determine the correlation, and to what degree and what strengths can we say these assets are what's correlating? All right. So let's look at two factors now, some factors in asset correlation. Let me take the correlation coefficient. All right. Those of you doing maths, we know the formula for correlation coefficient. I don't know correlation coefficient. So let us say we have a point A, all right, and then a point B. Okay, where you have this first point here, and then you have this in the formula. Well, but I'm not going to write out the formula, so I'm just trying to make things easier for us. At this edge, very extreme edge, we have the +1, right? In terms of the correlation coefficient. Sorry. Why is the plus symbol not showing? All right. +1. At this other end, what do we have here? -1, just like your graph now, something like that, okay? So I'm just trying to determine, or just trying to understand correlation coefficients, because once we can understand this, it's going to save us a whole lot in terms of now understanding intermarket analysis, okay? So just follow me, fam. So at the center, what do you have here? You have the 0 point, okay? So at the end, extreme end, when you see the market tilting towards the side, right, it simply means it's positively correlated. Whenever you see the market tilting towards the side, it simply means it's what's negatively correlated. Okay. One thing I want you to understand also is that there is no such thing as a perfect correlation. There is no such thing as perfect correlation, right? You can only have either plus 0.89, 0.09, all of all those things. Okay. In between here, you'll be having price point of positive 0.5. You also be having here as what? Negative 0.5. All right. So there's no such thing as a perfect correlating asset. All right, there is no such thing as a perfect correlating asset. So whenever we are talking about asset correlation, we want to look at how positive, to what degree is it positive, and then to what degree is it negative. All right. So that is what we want to get to understand: positive correlation and negative correlation. So let me just write this here. Let me just drop this note here. So this end is the positive correlation end. Let me use positive C. The C stands for correlation, okay? And then this other end stands for what? The negative correlation. Right? The C stands for correlation, okay? So just to make things easier. So we have the positive correlation end and then the negative correlation end. All right. So the greater the absolute value, just take note of that, all right? The greater the absolute value, that is whether it's tilting towards the positive correlation or the negative correlation. So the greater the absolute value, which are these values, all right, +1 and then -1, all right. So the greater the absolute value, the stronger the relationship, either positively or negatively, all right. So you want to just write down somewhere else, right? The greater, sorry, the greater the absolute value, which has to do with the +1 and -1, all right, the stronger the relationship, either positively or negatively, all right. Right. So the greater the absolute value, the stronger the relationship, either positively or negatively. All right. So take note of this. I want to drop a note for you now. Just take note of these things, all right? Sorry. Take note of this, all right? +1. So for +1, it's if the assets or whatever. Can I make my text bold? All right, sorry, I'm going to do that. All right, let me make this one bold. Now, this one I'm even much interested in. All right, so I think this is bold enough. Right. So for +1, if the assets or not assets, now let me use the word assets, please, since we're talking about assets correlation. All right. If the asset is the greater the absolute value, the stronger the relationship of the two assets, right? They're either positively or negatively. All right. So if the asset is tilting towards the +1 region, which is the positive correlation part, right? One of the things we know is that if the asset is +1, then what we have is that the variables. So when you see an asset that is heading tilting towards the +1, right? The variables are known as perfect positively correlating assets. That means if one variable is moving in one direction, the other would move in the exact same direction. So if one variable, in this case now, an asset is buying, the other asset is going to be doing what? Buying. It has to do with two different assets, right? If the asset correlation coefficient is at 0, all right, that means the variable is not having any correlation. That's the two assets now is not having any form of correlation. Okay. If it is -1, that simply means what? The variables are known as perfect negatively correlating assets. That means if one variable is moving in one direction, the other will move in exact opposite direction. Right? They are not going to be going together. Now, in the forex market, from the little studies I was doing, I came to realize that in the course of, this is just we're trying to achieve the very basic, okay, when it has to do with relative strength analysis. That's what we're still trying to get to understand. But the more you advance deeper into intermarket analysis, right, and the whole of all those things, you come to realize that some guys actually they do this maths in the market, calculating two different assets, right, trying to determine their correlation coefficients, trying to determine their relative strength analysis and all those things. But we don't need all those deep details. Some persons have paid the price for us. They've gone ahead of us and paid this price. So our duty is just to do what? Use what they are using already. Okay. So I just want to bring this down home. So when you are looking at a particular pair, all right, and you see the correlation, you can easily tell these assets. And remember, I said there is no such thing as a perfect correlation, right? You will not see an asset that is so perfectly correlation of +1 or -1. The highest you can see is 0.9 or -0.9, okay? So that's what you can see. So whenever you are trying to do your asset correlation or intermarket analysis or relative strength analysis of two particular pairs, you want to try to even understand the level, the degree of their how correlated they are. It's going to save you a whole lot of stress, okay? So if you can understand to a great degree the level of the asset correlation, it's going to save you. The variables are known. So when you want to do an asset correlation, once you can get two assets or three assets or four assets that are highly correlative positively, it can give you a very good indication that once one is diverging or once one is doing something else, the other will definitely do the same thing. So, and then one asset can serve as leading indicators to what other assets are going to do. All right. So you want to understand to what degree are they what correlated positively and what also negatively. All right. Same thing applicable to what the negative part. If one asset is now buying, since they are highly negative, as it begins to buy, automatically the other one is going to begin to sell. All right. So your ability to determine the strength of all these things is going to save you a whole lot. All right. So I just want to drop a note here. You might need it, you might not need it, somebody might need it, you might not need it. I don't know. I'm just even having double mind dropping it. But let me just drop it anyway. I hope it don't become a waste of time or something like that. All right. So let me just drop this note here. And you can, it's more like a table, all right. So different forms of correlation coefficients. All right. Or let me just say it. You can write it, okay? So if you have three line like this, so you can just write that out, maybe save more time. If not, I would have loved to type it out, okay? So you can just have three lines like this to save time. That's why I'm doing this. So we have this to be correlation coefficient. You can write that out. The first tab to be correlation coefficient. The second tab to be what's the correlation strength, all right? And then the third tab to be the correlation type, okay? So based off on this now, you can see that asset that ranges from negative 0.7, all right, to negative 0.1 what's very strong. Their correlation strength is what known as very strong. Okay, so you can just write that out and take note of this. The reason is no doubt some people like to keep it simple. You can keep your trading simple, you can do all those things. But me, this is the kind of trader I am. All right, I do very much, and then I even find more peace in terms of asset correlation and all these things. In short, adding it to my checklist of SMC makes things so easy for me. Like it makes trade easy. Like once you understand asset correlation and you say it's only SMC you want to trade, it makes it easy, like without stress. At the same time, you don't need all these things too. All right, you can just choose to do on structure, you'll be profitable that way. All right. So either ways, we're just sharing all the knowledge you have for anybody that might benefit from it tomorrow. Okay, that's what we're just trying to do. So we have different types of correlation strength, all right? We have the very strong, moderate, weak, and low correlation, all right? So this can range from assets that are what negatively correlated from 1 to assets that are positively correlated, all right, or I mean negatively correlated from -1 to around -7, all right, are known as very strong. Their correlation strength are very strong. That simply means if one is buying, the other one exactly the same movement is given with the selling. Example of such assets is what the DXY and the EU, all right. Once the DXY is buying, you can easily see the copycat between DXY and EU. So their negative correlation strength is very high. It's ranging from between -1 towards -7. All right. For other pairs like gold and silver, a highly positive correlation. So their correlation strength is very strong. Because whenever you see gold buy, what are you seeing silver do? Also buying just exactly the same way. Okay, so just like gold and silver that are highly positively correlated, their correlation strength is very strong. All right, same thing also with DXY and EU. Their correlation strength is also very strong. All right, but anyways, silver and gold are positively strong. DXY and EU are what negatively strong. Okay, so based off on this, anytime you see DXY making a particular move, you can easily tell that EU is going to make that same move. Right? Whenever you see gold making a particular move, you can easily tell that silver will make exactly the same move. So your ability to know their correlation strength, is this correlation very strong? Because this is where the problem is in terms of correlation assets, asset correlation. Okay, is this correlation strength very strong? All right, is it moderate? Is it weak? Correlation pairs that are weak, you don't want to trade them. You don't want to correlate such assets. Right, at point zero, which simply means what there is no correlation at all. So you don't want to be looking for asset correlation between 2 points or 2 assets that have a correlation coefficient of 0. Okay, you don't want to look for assets that have a weak correlation strength ranging from 0 to maybe -3 or +3. You don't want to look for correlation strength or do asset correlation of two pairs that are moderate. No, you don't want. You want to be looking at assets that are strong and very strong whenever carrying out your correlation or relative strength analysis in terms of trading. Okay, so these are part of the factors you want to look. So you want to understand how do we calculate. Now, these guys that have gone ahead of us in the forex market, some must pay the price of calculating these things. You see them with calculators, different formulas, calculating all these markets to determine. Now, by the time you begin to hear some pairs and ask yourself, how on earth are these two pairs correlated? You will get shocked because they did the homework, they did all these things, all right? So they knew that, okay, this pair, you are looking at DX1 and EU, but there is one other pair, all right, that even gives more play than EU and DXY in terms of what to do. That is, you can use them as leading indicators and you can also use them as lagging indicators. Anyone you want to use them as, okay? You can use them as all about those things. So this is what asset correlation is basically all about. All right, that's what it's basically all about, asset correlation. So you want to know these assets that I'm looking at correlating, all right, are they highly positively correlating assets? Are their correlation strength very strong or is it very weak? If it's very weak, don't correlate those assets. Don't correlate it. All right. So just like this asset correlation now, that is what is going to lead us into what relative strength analysis. Because it is now relative strength analysis, we now begin to compare the strength and the weakness of two assets to know if we're going to buy or sell those pairs. Even when we're talking about correlating those different assets, okay, the assets you want to even be looking for relative strength analysis on are assets that have a strong correlation strength. Okay, these are the assets you want to be looking for these kind of things for. All right. All right. So let's now begin to look at the next part, which have to do with relative strength analysis. So in relative strength analysis, all right, the major things we are looking for are strength and weakness. Nevertheless, the two or more assets you are looking at or comparing has to be high or more correlated. Otherwise, the information is not going to be accurate. All right, let me write that out. So in relative strength analysis, now we're talking about relative strength analysis. So just take note of this, okay? In relative strength analysis, arrows SA, let me use arrows SA, relative strength analysis, okay? The major thing we are looking, so relative strength analysis, the major thing we are looking out for are what strengths and weaknesses, all right? But nevertheless, even in the two pairs you are looking at, they have to, or the two pairs you are looking at or comparing have to be highly correlating assets, either positive, highly positive correlating assets or highly negative correlating assets. Otherwise, the information is, or the information, sorry, would not be accurate. All right, so these are things you want to take note of, okay? This is something you want to take note of. Trend analysis, which we're going to dwell in for quite some time before we now begin to look at intermarket analysis, because that one is way advanced. Because in relative strength analysis, we are comparing, for example, two different metals together, gold and silver. We are comparing EU and GU. We are comparing DXY and this one. We are comparing AU and NU. Okay, but in intermarket analysis, it is not just a comparison of the same assets like EU and GU, like currencies. It's not the same comparison of what commodities, like I mean the metals, okay, right? Commodities, yes, or comparison of oil or comparison of indices, Nasdaq, US, and all of all those things. It's way beyond that. All right, intermarket analysis is way beyond relative strength analysis. So in intermarket analysis, we are looking at the stocks, using what the stocks is doing to compare what the bonds are doing, using what the information you're getting from the stocks and the bonds to see what the commodities, like the gold, the oil, all those commodities, cassava, all those little things that can trade. All right. Looking at what the stocks, the bonds, the commodities, and how they also affect the currency market. Now, crypto now is coming into the picture of it, right? Crypto now is coming into the fifth picture of each and every one of these things. So you want to know how all these things work together in intermarket analysis. So that one is way advanced from what we normally do in terms of relative strength analysis. So we're going to leave the aspect of intermarket analysis for now and focus more of our energy on relative strength analysis, divergence, and then we're going to go further to just as we have in our course outline, okay? After looking at relative strength analysis, we'll go on to look at divergence, right? Seasonalities, open interest rates, and all those things. All right, we might not look at intermarket analysis since it's way advanced. Each time an opportunity comes again, all right, we will now look at what intermarket analysis. All right, so that is that for that aspect. So relative strength analysis. Just take note of these following pairs. These are pairs that you can easily correlate when looking at relative strength analysis. Pairs like EU and GU, pairs like gold and silver. All right, pairs like Nasdaq, pairs like Nasdaq, US 30, and what is the other one again? SP 500. All right, pairs like AU and NU, pairs like EU, DXY, EJ, sorry, DXY and EG, Euro GBP. All right, and these are some of the major pairs we tend to correlate. Okay, so these are pairs that we can now begin to use to look for relative strength analysis. All right, for the gold and silver, like when you look at your metal list here, right, you're going to notice that I have gold, I have silver, I have gold euro, gold to GBP, gold to AUD, gold to NZD. All right, they also help in terms of my intermarket analysis. I mean, relative strength analysis when doing that analysis. Okay, so but we'll just keep it simple at the very beginning. For now, we're going to just keep it very simple and then very basic. Okay, then as we begin to progress from there, we're not going to make the move. So, for example, now you all know, okay, not you all, but majority of you know that EU and GU are what kind of correlating assets? They are positive correlating assets. That is to say, when EU is buying, GU is also doing what? Is buying. Nevertheless, in terms of their correlation strength, EU and GU are not very strong. Their correlation strength is not very strong. It is rather strong. Okay. EU and GU correlation strength is not very strong. You don't categorize it under the very strong category. You can categorize it under the strong section. All right, just like that tabular format we drew under correlation strength correlation. Okay, they are not very strong positively correlating assets. They are just under the category of strong positively correlating assets. That's why sometimes GU can be selling and EU can be buying, but in the long run, they are going to now come back and somewhat fit themselves in. All right. So EU and GU are positive correlating assets, okay, but they are strong positive correlating assets. All right. Gold and silver are very strong positively correlating assets. Nasdaq, US 30, and SP 500 are also very strong positively correlating assets. AU and NU are strong positive correlating assets. All right. EU, DXY. All right. Leave the EJ now. Just leave the EG, Euro GBP out of this picture now. But the EU and the DXY, for example, are very, if I can use very strong, I will use, right? But they are very strong, what? Negative correlating assets. So EU and GU are strong positive correlating assets, all right? Gold and silver are very strong positively correlating assets. Nasdaq, US 30, S&P 500 are very strong positively correlating assets. AU and NU are strong positively correlating assets. EU and DXY are very strong negative correlating assets. All right. Let me remove the Euro GBP from here. Okay, that is the EG. So you don't have to confuse this part. Okay. So EU and DXY are very strong negative correlating assets. Whenever you are doing your relative strength analysis, you want to even channel a whole lot of your energies to assets that are strong, positive, or not strong. Sorry, you want to channel your energy to be very strong, positive correlating asset, very strong, positive correlating asset, or very strong negative correlating asset. All right. After that, if you don't have any of these in your checklist, you cannot begin to consider the strong positively or the strong negatively correlating assets. But you don't want to correlate in asset relative strength analysis. You don't want to be looking at what the moderate or the weak correlating asset. All right. So we have this list now. So whenever you're looking at EU, you can easily tell what GU will do. Whenever you're looking at gold, you can easily tell what silver. Two of them works together. Whenever you're looking at Nasdaq, you can say, okay, US 30 should be doing this. Whenever you're looking at EU, you can be saying NU should be doing this, DXY, and all these things. Okay. So this is just it about the relative strength analysis in this part. So in other words, when EU is creating highs and higher lows, higher highs, we want to see GU create also what higher highs and what higher lows, because they are positively correlating assets. And from your notes, we took note that positively correlating assets, when one variable is moving in one direction, the other variable will move at exactly the same what direction. If they are negatively correlating assets, when one asset is moving in a particular direction, the other will move in completely opposite direction. So since these ones are strong positive correlating assets, all right, when EU is buying, creating higher highs, and characteristics of a bullish market, right? Price creates lows, higher highs, higher lows, and all about that. So when you see EU and GU buying, all right, when you see EU buying, you want to see GU buy. When this EU is giving characteristics of a bullish market, you want to see GU continue to also give characteristics of what? A bullish market. But since they are not very strong positive correlating assets, sometimes there might be changes there. Same thing applicable to gold. You want to see gold do what? When it's buying, you want to see silver buy just like it. When it is selling, you want to see silver sell like it. Same thing applicable to EU and same thing applicable to GU. All right. Nasdaq, US 30, and S&P. When one is buying, you want to see the other one buy also. All right. You want to see the other one buy also. When one is selling, you want to see the other one give you the characteristics of a selling market also. In AU and NU, when one is buying, you also want to see one buying. When the other one is selling, you want to see one selling. In EU and DXY, when one is buying, you want to see the other one selling. When one is selling, you want to see the other one what? Buying. All right. So that is going to be it for relative strength analysis. This call, I'm not going to be looking at divergence and how we can now use this strong positive correlating asset and or strong negative correlating asset, or very strong or very strong positive correlating assets, or very strong negative correlating assets, or strong positive or strong negative. Anyone, we're going to by now look at how we can use these things to play the divergence and how we will be able to take the play from the chart. All right. So thank you very much.